Tom, thanks so much for being with us again today to talk about COVID-19 and the economy. We wanted to focus today on a specific topic, which is the impact of the pandemic to the U.S.-China relationship. And I'll start by asking you, how worried are you to have this new element coming into that relationship, and what do you think is going to happen?
I think this is one more straw on the back of a very large camel. I've been talking with our customers and others for the last couple of years about the fact that the most important bilateral relationship on earth, which is the U.S.-Chinese relationship, is accumulating more and more stresses and pressures. And that was certainly true before COVID-19. COVID-19 adds a substantial additional complication to that. I think we're seeing that play out right now in current events. And I think it's going to make it more challenging to manage this relationship in the short term.
I'm going to show you a couple charts, have you react to those. The first one is going to be a chart of a poll conducted by the McLaughlin political consulting firm asking likely voters whether the U.S. should end or reduce its dependence on Chinese imports. As you can see here, 75% said yes. What do you say to that?
I say, number one, I'm not surprised. Free and open trade is rarely a majority opinion if you ask average voters, right? So it doesn't surprise me on the one hand. It does, however, I think, give you one data point in the many data points substantiating the point that I just made, which is that it's going to be more complicated to manage this very complex bilateral relationship with the addition of the COVID-19 dynamic.
The U.S. and the Chinese economies have become much more integrated over the last 20 years. If you look at this next chart, it shows the total value of U.S.-China trade, imports and exports combined since 2000, growing to close to $600 billion today. Just talk about what this trajectory has meant to the U.S. economy and to the global economy over this time period.
Well, it's very hard to underestimate or understate just how important this has been to the development of our economy over this time period. I'm looking nostalgically at it. I moved to China in 2001, back at the beginning of this graph, and lived in Hong Kong for 4 years, and have been an observer of this increasing interdependence, which is, it must be restated again and again, this is a mutually beneficial interdependence. Are there sources of consternation in our relationship with the Chinese? Absolutely. Are there issues that have been accumulating and getting more annoying and more difficult and hard to manage over time? Absolutely. But the fact that we have become and will remain highly interdependent with the economy of China, and that in many ways is mutually beneficial and in our own best interest, is absolutely true, even if it's an unpopular opinion.
Let's talk about it specific to the rural economy and to the U.S. agricultural complex. China's obviously become a very important destination for American farmers and producers and agribusinesses. Talk about that element and what are the implications of the continued fraying of this for that part of our economy?
Well, let me answer that by going back to something I've said before, and it bears repeating endlessly, which is for the next generation or two for U.S. production, agriculture, and agribusiness, the most important thing we need to keep in mind and at the forefront of public policy is exports, exports, and more exports. China is one of the top 3 export markets today for U.S. agricultural production. That will likely remain at one of the biggest opportunity sets for American agriculture long into the future, which means we have to get this right. We have to manage the overall relationship with China properly, but we need to make sure that that includes unfettered access or the maximum degree of access for competitive U.S. agricultural products to be sold to China, which is, at least on a PPP measurement basis, the world's largest economy, if not in U.S. dollar measurement terms, and is likely to continue to grow far into the future. And so we cannot afford to be locked out or substantially constrained from China as a potential export market, not just for agricultural commodities, but for all of the things that the United States produces, but particularly for agriculture.
So last chart in the series here shows China's share of exports by agricultural commodity. Take a look at this chart and what's your reaction?
Well, my reaction is this is a living, breathing, current manifestation of mutually interdependent trade and mutually interdependent economies. Of all of the U.S. agriculture that gets exported, this is obviously China's percentage. These are big numbers. Even the smallest one, corn at 5.4%. There's a lot of corn. It's a big volume number. And so you can't just shut this off. You can't really live without this market. And frankly, you can't replace this market at the flip of a switch. And for the future of U.S. production, agriculture, and agribusiness, our production is likely to continue to grow at a comfortable rate as it has all of my lifetime, as we become more and more and more efficient. And since we're not going to soak up all of that additional production by domestic demand in the United States, more and more and more of our production on percentage terms and in absolute terms has to be exported. Right? And so when you look at all the places that you can export, our top 3 export markets for U.S. agriculture are Canada, Mexico, and China.
When we think about the U.S.-China relationship and the political management of that relationship on the U.S. side, what's it going to take for that to be successful?
It's going to take a very thoughtful, very detailed view of what our interests are and an ability to execute that over decades through the American political cycle. Whoever the individual or whatever party it is who's in the White House or controls the House of Representatives or the United States Senate, we're going to have a long view on what our interests are with China and how we're going to manage them that survives through the political ebbs and flows of our domestic politics.
Last question. So you just talked about the kind of the public sector and its management of this relationship. It's also a private sector issue. How much do you think CEOs like yourself who are running companies with supply chains into China, that kind of thing, markets in China, how much retrenchment do you expect to see there from the private sector as they evaluate the risks associated with COVID and that have been exposed by the pandemic?
Private business is very good at figuring out what its interests are, where it should produce, what the costs are, what the environment is, what the market opportunity, and they will be very good at that in this environment too. And if it looks like they should on-source and bring back from China or some other location some of the stuff that they produce there and produce it here, they'll do that if that's the right long-term decision for their business. So what I'm looking at and watching for is to see how the policies of the federal government and how this debate in our country tilts the playing field in one way or another to make people say to themselves on the margin, you know what, it may be marginally more expensive for me to produce in the United States than to produce these widgets in China, but I see that the wind is blowing in this direction, and therefore my next factory I build is going to be in someplace in the United States rather than someplace in China, even if it's more expensive. And that will influence the behavior of private sector business, no question.